Dollar yen daily forecast April 17th, fxempire.com. The dollar yen pair fell during the Monday session as the dollar got beaten up overall against most of the world's currencies. However, the pair is starting to come close to several areas that have our attention and could be supportive, and as such, we're actually looking to buy this pair given the right type of price action. The 50% retracement level is just below where we currently sit from the breakout that we had to the upside, which for our money at least, with the moving averages, and this is the 200 day, but there's also the 50 and the 100, had crossed back around this area, signaling a trend change by a lot of different metrics. There was the downtrend line that went through right about here from the financial crisis. On the weekly, they got broken, and the moving averages all crossed. 80 was a significant level, which it was massively supportive, and then it was massively resistive, even so much as to be able to contain two Bank of Japan interventions. And as such, the breakout of 80 cannot be overstated in its importance. With the 50, the 80, and the 200-day moving average all converging in a fairly tight range, we think that the time to buy the dollar yen is coming very soon. We are willing to buy on shorter term supportive candles the closer we get to 80 for a little bit of a fine tuning of our potential long-term position. This pair does pay at the end of the day a positive swap. It's not a big one, but it does exist, and as such you are paid to hang on to it. Once we get this bounce from 80 that we think that we'll get, we expect choppiness, but trend changes are never clean. They are almost always very choppy like this, so none of this should be surprising. Only those of you with the stomach to handle the type of volatility that a trend change can produce should be considering this trade. However, for our own accounts, we are looking for support from which to get long, and if we can get above the 85 level down the road, we'd be willing to hang on to this trade for months, if not possibly years to come. As far as selling is concerned, we couldn't do that until we were sub 80 on a daily close, and at that point in time, we'd have to reconsider it simply because one would have to think that the Bank of Japan would be watching at that point.